All right, let's jump into it. Where we at? It is 6:38 on Sunday, the 3rd of May. So I'll start off with sort of gold, just sort of while we're on the sort of chart here and that. And I think sort of really from last week, what we were kind of looking for was this sort of breakdown into this third leg of this structure. I mean, where we at? If we could take it through to that Saturday. So this was the way that we finished the week last week. Big positive push up with gold, a little bit of a sort of dribble back from a sort of pushing back, and then obviously pretty much the whole week was just sort of like a dribble back down sideways there. But I think sort of beyond this sort of point now, where you've got to sort of quite a messy sort of chart here, but you've got to accept that this is into that third leg, which is the all important leg really, because this is the one that's really going to sort of tell us due to this sort of last big sell down leg here coming down from what 53, 5400 or so. We've had the sort of come down, found support, we've moved up, found resistance, and it's like the question when you're in this sort of second part of this leg here is this a pullback in for the leg, excuse me, just to sort of push on a little bit sort of higher in that bounce leg. I think now that we've pretty much sort of broken down and come almost to the 50% retracement, it's enough to say, yep, okay, we're in this third leg of this larger structure here, and this is the one where we've got to say, is this going to come down? Are we going to get a double bottom? We're going to get lower low continuation, or is this it? Is that the pullback there? 50%. We found support. We saw a little bit of a push up, and then we start to sort of move back up. In the event that this was a sort of a pushback, and we would sort of say that this is the leg coming down here. Then you flip from this being the structure to this being the second leg of this bounce structure, meaning that realistically, if we were to be sort of pushing a little bit higher, our trade would be looking for, we'll drag this out here, a move towards bounce highs, which is around that 4,900, to see if we have continuation. That's your confirmation line that this, obviously, third leg of this structure down is completed. We've now entered into higher highs, higher lows, and then of course we start to reevaluate: are we selling into rips, or are we buying dips, basically? Battery's low already. I just started 2 seconds in, but point is that sort of like, should we sort of break a bit higher? That's the structure we'd be looking for there. But the question at the moment is this done? Is this far enough down here that we've sort of gone, okay, yep, we've come down far enough, and that was going to start to move back up? I don't think we necessarily are. I think some of these bounces in gold, positive bounces over the last couple of days there, headline driven kind of things, I think there's still those euphoric kind of moves that we've seen a lot over the last couple of weeks, and that it's quite a messy sort of chart here, because we'll get rid of a bit of this sort of stuff. As much as I love this stuff to sort of tell a story, we'll just sort of get rid of this, just sort of to clear it all up a bit. So what we've sort of seen through these periods here, these really drastic sort of like, sideways sides, and then really bullish breaks higher. And then they get sold into this little pushback up here, gets sold into, like, not just the previous Friday, but the Friday before, we had that push right into the end of the week. Similar now. People love to hear these kind of bits of news that, you know what, Iran's coming to the table, and that maybe the US are going to actually have a discussion to move things forward. And we know how gold in this particular case is going to react when these sort of bits of headlines and data sort of come, not data, but headlines come out. And we know that it gets really bullish. And we know that, okay, yep, dollar sells off. We know that gold pushes. We know Aussie will push, so on and so on. And then we alternatively obviously have the fact that most of these things turn out to be just that headline fabricated hopium kind of sort of moves, and the market actually goes, hold on, wait, no, it hasn't changed yet, and we sort of move back down. And I think that the fact that we're not there yet. I mean, we see headlines, the market's starting to sort of pay less and less attention in terms of knee-jerk things to these headlines. Like, for instance, over this weekend, at the moment, we've got quietest weekend markets than we've had in months. Like, we're back to the sort of what we used to kind of see with the weekend markets. Like, when you take it back before, like the Iran situation kicked off, or any of these sort of wartime sort of things, weekend markets aren't really much. You're not seeing like multiple percentage gap ups, gap downs, and that from the weekend markets. But ever since we've had these things, oil's been 5 or 6%. We've seen gold 1 or 2%. We've seen silver 4%. These kind of things, and that at the moment we've got very, very sort of flat. Let me sort of pull it up here. Actually, not weekend markets, just weekend. And if I'm sort of pasted across here, you can kind of say that really, compared to what we've been seeing previously, this is, gold pretty much at $4.50, 0.1%. Oil pretty much dead flat. The equity markets back and forth, but pretty much dead flat. So this is the quietest we've seen it in a long time, and we've still also had headlines over the weekend. We've had, Iran putting support some proposal. We've had Trump sort of well, not vetoing it, but sort of knocking it back, saying, hey, they haven't done enough. I think that I saw some headline where Trump was sort of saying, hey, look, you know what, Iran has to pay for what they've done. Okay, don't worry about the actual sort of semantics of it all. But the thing is, these kind of headlines, if this was a month ago, wow, we'd be seeing those multiple percent moves in that, and we're not sort of seeing it now. Anyway, the point is that sort of like the market becomes a little bit numb to these headlines, and we'll still see these hopium kind of moves. But as you can see, there was these positive things, headlines coming out, and yes, they sold up. Yes, it moved up here, and it spiked back up quite strong there. But again, equally, in the grand scheme of things, it didn't change the course of flow of direction really, other than just a couple of bucks. Sell down, push back up, yada yada, this kind of thing for it all. So I think realistically, we are still, and throughout all this sort of like sort of back and forth sort of talk here, I think that this pullback leg here is still in act, which means I think we're still selling into rips, which means I still think we have lower to go with gold before we potentially see a more substantial run up like this. And so around sort of maybe 4,400, we're at 46.14 now, around that 61% retracement, previous levels of support, previous highs over here, there was a low down over here for that spike, that 4,400 round number, 61%. That's a level that I think this sort of pullback down here, this third leg, could push to if it is not even to sort of go even further. Because remember, that third leg is really the defining leg. That's what's going to give us high, low reversal, double bottom range / reversal, or lower, low continuation downside. Then we're looking at 39, 3,800. I don't necessarily think we're going to get to that point because I do think that the market, if you strip away the war situation, which I don't think will happen, carry on forever, I do think that the market wants to buy gold. I do think the market wants to sort of like get back into that idea of, okay, let's buy metals like we saw all the way through 2025. However, while we do have these headlines coming out, while we do potentially have the US dollar breaking higher from, 10-month, 12-month consolidation, I think people are reluctant to buy gold. So all that sort of like, unpacked, I think that we potentially have some upside in the dollar, some downside in gold, and I wouldn't necessarily be buying something to sort of say that this whole correction phase period is over. We've actually put in, as you can see, three sort of quite significant lower highs through this period. Until that gets resolved, i.e. sort of like, above sort of 4,900, I think we're still in at least minimum a bit of a descending triangle. As you can see, there's a fairly flat straight line around this area over here, say, 42 to 4,400. I think if we do get down here, of course, I just said 4,400, I'm looking for that bounce. But I think certainly we have another little bit of downside to come, even if we are potentially going to come a bit higher. But I think you still need to sort of, understand the fact that this thing is still putting in lower highs with a sort of flat line, well, not really flat, but I guess a bit of a sort of flat base along here, should we see a rally from 4,400, of course, which, as we know, generally leads to a breakdown through that sort of solid flat line, because we can see the sellers are accepting less and less each time. Even this one, they came up even lower and lower. Let me just pop another line just through here. So say there. So what we can use from this, so you can see that obviously this little bounce through here, this little falling resistance from that sort of what was that early March high at 5,400, connected with this 4,900, gives us an area where we could see some reaction as well. But I wouldn't be surprised if we still have some downside, a little bit of a bounce around this area, and then see what happens coming up for a bounce here. We could get quite a substantial bounce up here, and it could push back up over here, and that would give us a bit more of a sort of higher range that we could work with. But that's, I mean, that's down the track a little bit here. Obviously, what we're trying to ascertain, sort of what could we sort of be expecting this week? What what can we trade with over the next couple of days, and where are our confirmation lines? So I just think that these little pump ups were a little bit euphoric. I think that's a little bit sort of ahead of itself. I think the market wants to buy it, hence the headline comes out and they're like, yeah, cool, cool, we could buy it. But then I think reality sets back in which we actually know that, hold on, wait, no, it's not over yet. And look, it's not, in my opinion, I'm not a war person, but in my opinion, my thing that I'm sort of looking for is till Iran says we're going to abandon nuclear ambitions, the US are not going to move their blockade, and that means nothing's going to get fully resolved. There's no path to full resolution till that happens. So as long as sort of Iran's still sort of in the headlines saying, hey, look, like that's the thing. The last headline was like, oh, we'll give you our 10-point or 15-point plan for resolution, but the new nuclear talks, we'll put them off till we've resolved the war. It won't be like that. The whole point of the war is initially based off the idea of the nuclear talks. So that's what the US is there for. So till they get that, then they're not going to move. Till they get that, Iran's not going to sort of back down. So I think that while we still have that particular scenario playing out, I think we could still just go off the charts into these levels here. So downside be looking for, certainly if you get down underneath 4,500, I think a quick move to 4,400, around that 61%. Battery's dying already. Back down to underneath 45, be looking for 4,400, then be looking to maybe sort of flip and give it a bit of a buy option, and then sort of play this sort of little bounce area through here. All right, so flip along, have a quick look at the dollar first, actually, before jumping on to silver, because the dollar, again, it's still having a bit of a hard time. We had a lot of central banks make this week. A lot of them are taking a fairly more sort of, well, they held with the FOMC. We had the BOJ, we had some intervention happening this week, which I think really sort of spooked the market with the dollar. We saw some strong sell-offs there, but I think sort of like while the market, again, you got to think of these things in sort of like pre-Iran war situation. It's not exactly post at the moment, but it's sort of like during kind of thing. But the market was like, okay, yep, dollar needs to cut, US economy, sell everything US. That was the kind of play with it all. I don't think that seems to be so much of the case right now. Although the dollar was definitely on the back foot through here, obviously you can see the sell-off here. You can see what happened when the BOJ intervened. It got hammered. But again, it's found support. It's just given them another shot exactly where they found support was a week ago or so. So I think sort of like realistically, I still think that this will be a little bit of a short-lived sell-off here. Again, I think you still, before you decide what's happening with the dollar, which in turn decide what's happening with gold, I think we need to see some resolution of these levels here. We need to close the gap, have one more move up, and if it does reject from 100, that's the area, that's the main thing that I'm looking for with the dollar, around that 100 level. Because I think closing the gap definitely will garner some sort of reaction, but I think if it's 99.45 or 99.50 up to 100, it's fairly close. You know what I mean? Any sort of move up into this area over here, I think will be the make or break time for the dollar. And should we see the dollar break and actually move out of this area above, well, again, you zoom this thing out, and you can see this is a sideways level that it's been in for quite some time. It's tested out the top a couple of times, obviously been rejected. If you break there, you're looking at 102 as your first stop. If we get that 102 hit there, you wouldn't want to be long gold, put it that way. However, if we do get up here and we do see this rejection here, I think this is enough of an attempt, and it's sort of like, the market's tried to push out, tried to push out, tried to push out, unable to do. One last hurrah. If the market rejects from this 99.50/100 level, I think that'll be the time that we kind of sort of go, okay, the dollar's in trouble, and we look down at 95.96. That'll be the time that we see gold moving up. And this is the thing, this is what I say, these are the sort of like the cross chart confluence things. Like, these correlations aren't 1-to-1 100% of the time. But as I generally sort of tout, it's generally about 90/10. So 90% of the time, these guys will have an inverse relationship. 10% of the time, they can run together. It's not impossible that you see gold up, US dollar up, vice versa, both down. But they have been some big, big tells recently. When we've seen these moves like this, like the dollar getting absolutely smashed back down, gold should be moving up. When you see the dollar get smashed and gold isn't moving up, they're already saying, hey, look, the money's obviously coming out of the dollar. We can see that. It's being sold off. 90% of the time, those flows, that capital will be going into gold. That's just a good place transfer. Obviously not 1-to-1, but as I said, 90-to-1, 90-to-10 of the time it'll go in there. But if the dollar gets sold off and they're not buying gold, if the dollar then starts to rally, i.e. so they start buying the dollar back up there again, well, that's when they're already not buying gold. Now they're buying the dollar. You're going to see gold get absolutely hammered. And we saw this a couple of weeks ago. I mean, we've seen it actually a couple of times over the last couple of weeks because obviously gold's been in a fairly big consolidative pullback kind of phase. But the point is that the dollar got sold off here. We didn't see gold rocket back up to 48, 4,900. If we start to see the dollar move up over here, that's going to give some downside pressure on gold. And then this is going to be a big sort of decision make or break time. We already know that gold's in that descending triangle, which favors the idea, that nothing's ever guaranteed, but favors the idea of a breakdown lower. But if we get the dollar back up over to these levels, which I think we will, that gives downside on gold. Make or break time there. If the dollar breaks out of this sort of 10-month, 12-month consolidation, and the gold's already being sold back down, I could definitely see it sub 4,000. Doesn't mean that sort of like gold's over and we're going back to 2,200. I don't think that's the case at all. But I do think that if you want to buy gold as a long-term or medium-term investment, I think you've got better options and better prices than we have right now. Okay, so all that kind of dribble stuff about. So what we'll do is we'll bang a little alert here at 98.38. Get the alerts to work. That's copy price. As you can see, we've obviously had that pullback here. If you look into this as well, if we just get back onto the technicals as well here, this is what we call a 3 drive. So you can see here where we've had that first drive down, tried to rally, second drive down, actually maybe call that as tried to rally through here, third drive down, and then moving back up. So we've got a pretty flat line. We've seen this previously as well, around that sort of like 98.40 kind of area. A break above this level here, you probably first of all look to undo this sell down, because again, this was just that BOJ. It wasn't like a whole market had decided, hey, let's sell the dollar. This was influenced by what the BOJ did, or what they decided to just dump US dollar across the market, because it got up around 160, 161 or something like this. But if we break above 98.40, be looking for that sort of body fill around 90, call it 90, looks 99, but it's 98, close enough, 99 around the same. And then a break above there, well, as I just said, around that sort of 100 level is probably where we'd be looking for. But certainly at the moment, you've got, this is on the 4 hour, we've got a 3 drive down, we've got a dead straight line, which is what we want for a little bit of a break higher. We've got the RSI completely oversold, turning back up. So should this thing break a bit higher, the RSI is there set to support the move, and we'd be looking for that body fill up around this 99 level here. So let me just bang this in. Body fill on the alert through there. Okay, we'll take along, have a quick look at silver. So silver's another one that it's still pulling back. Obviously, it actually sort of reacted a little bit better than gold, in my opinion, in terms of its bounce on this kind of stuff. And this is that whole sort of, oh, here we go. Maybe something's been resolved kind of move over here. Let's actually do a little bit of work on this one. So we can actually go as a long position. No, we have this as pullback here. So here we can see, obviously broke the trend of this sort of bounce move, coming down, moving back up. Now, again, the big sort of move is back above 83. You get above 83, okay, we can talk about 90, that kind of stuff. The question is at the moment that this was one move through here. This was your sort of bounce off the lows. We broke, retest, lower low, continue down. Is that enough? Has price been punished enough for breaking through this trend? Or do we think this is just a little bit more of a, well, okay, here we come down, came up perfectly high enough to take out all these technical levels. Sellers came back in at the last second, pushed it back down. Silver, I've actually been a little bit more reluctant to trade, a little bit more than gold more recently, but I do think it's going to follow suit. So I'll be taking more keys off sort of what gold does as to sort of what we can expect with silver. But I do think that this, again, is just going to be a little bit of a sort of euphoric bounce. People in the market, they want to sort of see this thing. They want to see resolution. If it does move up higher, I think it's just going to be sold into. However, I would still be sort of looking for probably around 67. I put it this way, sub 70. I still think we will see before we see a bounce higher. So I think this is just a little bit of a end of week positive flows just to be sold into. And if you look at last Friday, nothing's ever exactly the same, but this is the move we had last Friday, remember as well. Some headlines look great, metals up, and then we spent the whole week coming back down. So we'll see how we go with this one. But yeah, silver's a little bit on the back burner for me at the moment. So Aussie, again, still very, very sort of resilient. Actually, technically put in a new, what are we at, multi-year high. Only the fact of a week or two or so, but took out the highs here, sold back down here a little bit. I think there's a bit more of a clean cut sort of thing we can see for the downside here. Now, Aussie's a little bit different because, of course, yeah, we got sort of inflation. We had inflation out this week. CPI jumped up 1.2% or something like this. Yes, you could sort of say the headlines were like, oh, it's the highest it's been post-COVID, highest in 3 years. Um, but of course, you know what I mean. It jumped so much because of the fuel, basically. Like that was the big thing, the big change. And I think everybody's going to be dealing with this a little bit. And is that going to be a one-off thing in terms of a month, way one-off, I say 1 or 2 months kind of thing, or is that setting a trend in which we're going to go further and further? I don't know. I'm still reluctant to buy Aussie at these levels. As resilient as it has been through this whole period here, I still think any move up is going to be sold into because mainly I think that the dollar's going to have a run. I think the dollar's got upside. And with the dollar having upside, I think that that's just going to be, it doesn't matter if the RBA is a little bit more hawkish. We got the rate decision on Tuesday. I was watching a thing yesterday and they were sort of saying 75% priced in. So, you know, the market's pretty much expecting it. The market obviously has bought it up quite strong. I mean, here we are, a scratch off the highs of it all. So you got to think that if the market's expecting 75% chance of a sort of rate hike, plus we're up right near the highs, well, it's obviously vaguely priced in, meaning that if they do hike, there's not going to be a big shock factor. You may get a spike as it drops because there'll be a portion of the market that will also be pricing for the chance that they may hold. I think that'll be the greater shock. If they end up sort of coming Tuesday hold rates, I think Aussie will get hammered. If they hike, I think it'll have a blip, but then I think it'll be sold down. So again, in terms of buying it, even though it's right up at the highs, it's super resilient, all this kind of stuff, I still think that it's a tough call, and because obviously, yeah, it's when you're a blip like a couple of points off the highs, it's hard to sort of say, hey, yeah, it's a short here. However, the fact that I think the market's well aware that there's a good chance they're going to hike, and if the dollar does the dollar does have a sort of kick on, and we do see metals come back, I think all those factors are going to sort of hurt Aussie a little bit. So I'll probably feel keeping it fairly light on Aussie through the start of the week till we get that out of the way. But we'll put a little alert under here because I think sort of underneath, what's it, 71.80, give it take a couple of points or so, 71.77, we'll call it 71, yeah, 71.77 there. If I can actually get this in. I think that's where we could actually see a little bit of a pullback. Again, you got to sort of mark these things out, which I'll do in 1 second. And sort of say, obviously, this is where the little sort of platform where we've got the buyers through there. We can then sort of think, okay, if they do pull back, where could potentially, excuse me, could we see a bit of a bounce through this zone here? I mean, this was the plan that we would get a pullback. I thought it would have come down where we get to. We got to 71.11. We actually got to 71.03, but I was looking for 70.90s, so 10 points or so off. But then the idea was to get a bit of a bounce. This last kick over here, again, I think that bit of that sort of like this started from the BOJ selling dollars across the board. So anything that was across of US dollar benefited. Aussie did, yeah. We then had the metals have a bit of a sort of, we had the headlines from the Iran thing. We had the metals push up a little bit into the end. All these things favor positive Aussie. Aussie loves risk on. So, if we do see some sort of pullback and resolution from the Iran situation, Aussie's going to do better. Why? Because the dollar's going to be sold off. It's a bit more of a risk on, well, it is a risk on asset. Metals will do better. And you start to see that all these things will move in conjunction with each other. But not alternatively, sort of like at the same time, if we start to see the dollar strengthen, if we start to see metals pull back a little bit, if we see Iran situation not get any direct resolution in a short amount of time, like any sort of headline sort of saying, hey, look, the US are about to strike or whatever, like these kind of things, that's not going to be positive for Aussie. And you got to sort of think, okay, yeah, the RBA is about to hike, or good chance they're about to hike. Market's already priced for that hike. Once that hike's out of the way, they're not going to buy it more necessarily just because they hiked. Those profits don't belong to the people that buy it on the day. The profits belong to the people that took the position prior to it, or all the people that have been priced in from back here, start of May, all the way through April. So you sort of get the people that go, oh look, they're hiking, boom, let's buy it. That's fine. All the people that are sitting in profit for the last 300 points, 400 points, or whatever it was, 350 points, they'll be using that to sell into. Hence why I think that sort of like it's probably I don't know. I'm reluctant to buy. I could be eating my words next week, but I do think that potentially, look, you could still see some upside in Aussie, but I think ultimately we could be coming back in 2 weeks and be back down around 70 cents. I still think that's a possibility. I just don't see it necessarily being at the point now that we're about to go to 74, 75 cents, but we will see. Short term, underneath 71.77, targets then 71.12. If you break down underneath there, I think this level zone through here is obsolete now. And I think we start to look back down to 69.80, 61% retracement, this little zone down over here. That's where I'll sort of be looking for. There's just the fact that it just got above the high and then rejected. It's kind of like you take out all the sort of, or you at least test up here for like any sort of like textbook stops. Nothing there. Bang, we move back down here. But certainly down underneath these are the two levels that I'll be looking at this week. 71 cents and 71.80. Should we sort of break down underneath those ones there? All right, so a little bit of a quicker one just this week, but let's pop this thing through. Of course, we got the new month as well that's just sort of kicked off, and that actually technically just on the Friday was the first one there. So, bank holiday in Japan. What do they have? I always have fun ones. Observance of Greenery Day. Of course, it's a good bank holiday. So bank holiday. Got a couple of sort of inflation data. It might be interesting to see what comes with this. Of course, you don't get any forecast because this is exactly that. It's the gauge. What do we think is going to sort of be happening with it all? Job advertisements, negative 3.1. It's not positive for it there. This is another thing, just to still sort of touch on this thing with Aussie at the moment. Like, of course, everybody's always crying about potential recession risks, but if we get the hike here on Monday, which, as you can see here, the cash rate expectation 4.1 to 4.35, if we get that, it comes through there, we're equal to where the highest that we were through the whole sort of COVID period. Admittedly, RBA went a lot easier than a lot of these other people, even like, let's talk about RBNZ because they're the closest neighbours. We went a lot lighter, but there's a lot of talk that if this does go higher, that we could be seeing recession. And I know that everybody always touts this, and Australia is very like recession proof and all these kind of things. GFC, I think we avoided it while the rest of the world got slammed. But it doesn't mean we're just completely like sort of void of the possibility of having a recession. And that again, is that a risk on moment or is that a risk off moment? Well, it's obviously risk off, which again weighs on the idea of why would you be buying the Aussie? Should we be doing this? Yes, we could be seeing more and more rate hikes, but particularly when we're looking at Aussie as a cross against the USD, well, I don't think they're as sort of dovish as they were a couple of months ago. And so, it's a hawkish against a hawkish RBA. Sorry, central bank. Anyway, so what have we got? We've got a bunch of PMIs coming out on Monday, coming through. As I said, we've got the cash rate on Tuesday at 2:30, so that'll be a big one. Press conference at 3:30. Moving forward, Tuesday night / Wednesday morning, 12 o'clock, we got ISM and JOLTS coming out for the US. So PMIs, again, these are the ones, 50 is the expansionary, underneath 50 contraction, 53.8. So they're looking for a very slow little slowdown here, and services about even. Jolts, pretty enough to call that even, no real sort of change over there. The jobs over in the US, so I haven't actually sort of, it's funny because since we've had lost. Oh no, no, it keeps saying my battery's about to die. Um, since we've had the Iran thing, economic data has taken a big back step, and it's been a very headline-driven market for the last couple of weeks and that. So remember, prior to all that, everyone was crying about all the numbers. I mean, first Friday of the month, we got NFP coming out, 178 down to 60. Looks shocking. That actually looks shocking. Uh, Unemployment rate 4.3, 4.3%. Okay, that's fine. Where's the Thursdays? We have those job openings, don't we? 189. That's very low. Now unemployment claims 203 back up there. It's still a low number, and this is the thing that I was, got a little bit lost on there for a second. Is the idea that sort of prior to all the Iran stuff, jobs was the big thing with the US. Like inflation wasn't their number one issue. Of course, things have changed a little bit now because you've got the oil shock and all this kind of stuff that have come into it. But these are the things you've got to be able to peel back and have a little look at what's actually happening with the economic data. Because I do think, and this weekend's been a good example, the market gets a little bit tired of the headlines. You know what I mean? One week, oh yeah, cool. Iran's got a proposal. Market jumps. Oh, actually, Trump says, nah, doesn't care. Market dumps. Trump sends a tweet or whatever out, and the market reacts. After a while, they're just like, oh, geez, look, whatever. Let's just move on and focus on something. We saw the same thing with the Ukraine war. When the Ukraine thing kicked off, the market was very jumpy over it all. But remember, Ukraine is still going on. What are we, like 4.5 years or something? So the market will move on eventually. It'll either resolve the Iran situation. Maybe it's a little bit different here because, of course, you've got the Strait of Hormuz and all this kind of stuff with it all. But the thing is, the market does move on. And it doesn't, okay, necessarily ignore it, but it just means the reactions from it are more short lived and generally as a little bit less volatile. So they could then sort of look back to the economic data as to actually what's the Fed policy. what's the RBA going to be doing moving forward and their outlooks on it all. All right. So anyway, we had jolts and that coming out. For where we go, ADP. Okay, that's the private sector. 62,000 expected 90,000, so a little bit of a bump up there. And then again, not too much here. We got the minutes for the BOJ. Not a great deal going on here. And then, of course, as I said, we got NFP next Friday, which does look quite bad, to be honest, actually. What does it look like the last couple of weeks? Yeah, I think this was a little bit of a flare up, to be honest. Because if you can see, the general perception at the moment is around this 50, 60,000 mark. And I think that sort of like, particularly as to how much truth there is to all this sort of thing, is that since that ICE operation started happening over in the US, they said, okay, a whole bunch of people lost their jobs or got kicked out or whatever. And then the market has to recalibrate as to what it considers the norm. So you go back a couple of years, 65, 58, 66, they weren't great numbers, but it seems to be the general consensus of what they think it'll be. Wildly wrong the last 3 months. As you can see, it was double. This was negative. Well, they thought 58 came in minus 92, so negative 200-300%. And then, again, 300% or 200% higher. So, I mean, take it with a grain of salt as to what the forecast is. But, they seem to be doing exactly the same as what we see from the Australian markets and that. Every month they say 20, 25,000. Very, very rarely are they right. So take the forecast with a grain of salt, but you could see that the market may sort of be lightening up some dollar positions coming into this kind of event, because NFP is the bigger one of the ADP and the jolts and all these kind of data points and that sort of coming out. But I don't know. I wouldn't be banking too much on the idea that sort of like, oh my God, it's 178 and we're looking at 60, because if you look at last month, it was 92. Sorry, negative 92. The week before that, plus 130. So, I don't know. It's a little bit all over the sort of place at the moment. But as I said, I think the overall theme with it is that we could potentially still be seeing some dollar strength till that gap's closed. Weakness in the metals. The Aussie dollar, I think we could be seeing a little bit of a push up. But inevitably, I think they're going to be sell opportunities. I don't think the Aussies, I just don't think, we've got the right sort of fundamental basis in that to sort of see Aussie sort of up 74, 75 cents, for instance, at this point in time. All right, that's it from me.